Welcome back. A look now at all the business news, and Nifty and Sensex end the week on a positive note. Nifty rallied about 180 points to 19,435, while the Sensex ended just under 65,400. Mid caps and small caps jumped 0.7%. Hiral Dadia joins us with more details.
An interesting day of trade for the markets, where the Sensex as well as the Nifty have snapped a 5-week losing streak. Now, this was mainly led by real estate as well as the metal stocks this time around. Overall, we ended above the 65,300 mark in terms of the Sensex, whereas the Nifty surpassed 19,400 levels. Overall, if you go to see in terms of the Bank Nifty as well, that was clearly outperforming the benchmark indices in trade. Metals, energy, automotive and banking sectors rose in trade today, whereas there was pressure in selling in terms of healthcare and the pharmaceutical names, which were down in trade. Overall, if you see in terms of the breadth as well, that was absolutely in favor of the bulls. So that was interesting to watch out for. Power companies were also shining pretty strong. So you had the Nifty Metal Index, which was the top gainer, whereas the pharma, the top loser in trade today. Bank Nifty ended with gains of little over 1%. Looking at what's happened in terms of the broader markets as well, you have the mid cap as well as the small cap index, which ended with gains of around 0.7%. Looking at the movers and shakers in trade today, you had names like Financial Services, which was locked in upper circuit, and it's now out of the indices on BSE. It continues to remain on the indices on NSE. NTPC, ONGC was an interesting one, JSW Steel as well as Maruti. And you had Cipla, Ultratech, Cement, DRL, HDFC Life and Nestle India, which were the top losers. In terms of newsmakers, Coal India on the August production data was in focus. Mahindra Logistics on the back of the collaboration with Flipkart was in focus. Gufic Biosciences, where Motilal Oswal is buying stake. Mazgon Dock Shipbuilders jumped after the launch of INS Mahendragiri. PVR Inox recorded the highest box office gross revenue in the month of August. BSE shares hit an all-time high after they've increased the buyback price. Five-Star Business declined on the back of a block deal. Apart from that, IDFC First Bank also declined in trade on the back of a block deal. DCM was locked in upper circuit in trade today. Genus Power as well as ITD Cementation were in focus on the back of an order win, as well as you had, Network 18 and TV 18 broadcast, which advanced on the back of the BCCI media rights. Metal companies also surged in trade today. So clearly, a lot of stock-specific action is what we've continued to witness, but we have seen some bit of a breakout that has happened in the markets, and that is going to be interesting on the first day of the series, which has started today, which is the September series. Back to you.
I won't be surprised if Nifty corrects to 19,000 level over short term. That's the word coming in from Avendus Capital Public Markets Alternate Strategies. Andrew Holland. Speaking to BQ Prime's Neeraj Shah, Holland expects US Federal Reserve to cut interest rates by the end of this year. He added that rate cut is a tailwind for tech stocks in the US and will aid Indian IT stocks as well.
I wouldn't be surprised if the Nifty kind of tests that 19,000 in the very short term. I think, you could say that you could hide in the IT sector, which is, I think, a lot of people are thinking about, because let's take the next scenario, which is what's going to happen in the US. Our long-standing view, and I haven't changed it, Niraj, is that the Fed will have to reduce rates by the end of the year.
Okay.
All the data is showing it. It's accelerating very quickly. So if that's the case, that's good for, when you think through the recession and therefore the pickup as interest rates get lowered, you'll look for growth, and growth is going to come in technology, right, in the US, which will be a tailwind for RIT. I think we're 1 quarter away from kind of saying, yes, IT's through the worst, and we can move forward, because I think the data will start to show, and I know the market's saying this at the moment, yeah, bad news is good news in terms of the economic data starting to, but if it starts to really kind of go down quicker, then what you're going to see is that earnings will be reduced. There'll be more worries about how deep is that downturn, and markets will correct. So I think we're 1 quarter away from IT before I'd be going to be a lot more positive in terms of deploying funds there.
Bombay Stock Exchange has announced that company will back 34.7 lakh shares. They'll be buying back 34.7 lakh shares worth 374 crore. This amounts to 2.56% of the total equity. The maximum price of buybacks has been set at 1,080 per share. Saloni Doshi gets us the details.
Shares of BSE Limited were in the spotlight today, gaining over 5%. That's after the stock exchange raised its buyback offer price to 1,080 rupees per share. That's an increase of 264 rupees per share. The company had previously announced a rupees 374 crore buyback on the 6th of July at a price of 816 rupees per share. The number of shares to be purchased had not been disclosed. According to the latest update, the company will buy back 34.7 lakh shares or 2.56% of the paid up capital. And the total amount the company will spend stays the same. Since the announcement of the buyback on the 6th of July, the company's shares have risen by over 57%. And so, the current price is higher than the buyback price. The timeline for the buyback is yet to be disclosed, but the BSE has set September 14 as the record date. So if you are a shareholder of the company as on that date, you will be eligible to participate.
India's first quarter GDP grew by 7.8% in the first quarter of this year. Economists believe that growth will moderate in coming quarters due to factors such as poor monsoon, rising food inflation and global economic slowdown. BQ Prime spoke to HSBC's chief economist, India and Indonesia, Pranjul Bhandari, to decode the current economic scenario in the country.
It was 7.8%. Now, this number has a lot of statistical problems in it. And one problem is to do with deflator. There is a problem in the manufacturing deflator and also in the services deflator. In the manufacturing deflator, the problem is that commodity prices fell in this quarter. And what the CSO does is it does something called single deflation instead of double deflation. And whenever that coincides with commodity prices falling, manufacturing growth actually gets exaggerated. Similarly, for services, there's another deflator problem. Our services deflator has too much of goods in it than it should. It should have all services, right? It's a services deflator. But we have a lot of goods in our services deflator. So at a time when goods inflation is falling, which is what had happened in 1Q, services growth gets overstated. So if you add up both these deflator problems, my sense is GDP growth was exaggerated by 1 percentage point. So the 7.8% number was actually closer to 6.8% number in terms of actual growth on the ground. That's one problem. There's a second problem which is on base effects. From the pandemic days, there is a low base effect problem that is there in the first quarter GDP. It's also there a little bit in the second quarter GDP, but mostly in the first quarter GDP. And my sense is that has also exaggerated growth by about a percentage points. So if you put all of this together, because of statistical reasons, my sense is GDP growth on the ground was close to what it was in the last quarter, around 6%, rather than the 7.8% number that was published.
Got it. All right. So even going forward, the Indian economy continues to see some headwinds. The IMD in its press conference yesterday highlighted that August 2023 has been one of the driest on record. There have already been some concerns around rural demand. We've seen mixed trends and rural incomes now again seem to be a little bit of a concern. So at this juncture, what does it look like? How do you think that's going to pan out?
Yeah, I think GDP growth number is going to slow from these 7.8% levels. One of the reasons is just statistical. That base effect problem that was there in 1Q will peter off over the second, third and fourth quarter, and the GDP number will normalize. That does not mean the actual growth on the ground is weakening. It means that the GDP is getting to be a better indicator of actual growth on the ground, that exaggeration in 1Q will not be there. So one is going to be that. The second is that the actual growth on the ground could also weaken if El Nino intensifies, in the next couple of months. Now, one thing we are seeing over the last decade is that whenever we have a big climate shock, then generally food inflation doesn't rise very much, doesn't rise as much as we had seen in the previous decade, because we've become far efficient in importing, supply side logistics, clamping down on hoarders. So food inflation doesn't really go up. But what suffers instead is rural demand, agricultural production, what farmers earn, and therefore rural demand. So if El Nino intensifies, my sense is that rural demand could weaken and actual growth on the ground could also weaken.
And that's a wrap of all the business news.